What is going on, my friends, and welcome back to another video on the channel. Well, we are at an extremely urgent and crucial moment on the Ethereum price right now that I think will have a lot of effects on the rest of the market. And so with that being said, of course, let's go ahead, let's just skip the BS and let's just get straight into it, as there is a good bit to talk about and I don't want to take up too much of your time here. So paying attention to the Ethereum price, one thing that we can see is we saw an absolutely beautiful bottom side to top side Bollinger Band swing. Now, just a quick refresher on what the Bollinger Bands are. What they're going to be is basically you're going to start with a moving average. Now, this is generally going to be your 20 simple moving average. And now, after you take that 20 simple moving average, at every given point, you are going to apply two standard deviations away from that moving average, to the top side and to the bottom side. Now, that creates your Bollinger Bands. Now, generally speaking, a crypto will, usually resort back to this moving average, and it can only see two standard deviations away from it before eventually returning back to it. What this says is that once you usually get to the top side or the bottom side here, there is a very strong chance that within, the short to midterm, you will see a return back towards your moving average. So it is a good, decent way to kind of gauge when you're getting extended and when you can start to expect a pullback either to the bottom side or to the top side. As you can see, we will come back to this moving average, then extend. Back to the moving average, extend. Back to the moving average, and in this event, we extended to the top side, and now we're back to the moving average. So it's kind of like an anchor. It's something that holds that price that we will consistently resort back to. And now what happens now, though, is that as we have gone from bottom side to top side, and we've now resorted back to our moving average, it becomes the question of whether or not we are going to see a resortment back to the bottom side, or whether we resort back to the top side. Now, this is so important because this is the very first time since we've gotten to this downtrend that we've realistically come back down and even tried to establish some support on top of these Bollinger Bands, and especially on the 20 simple moving average. As you can see, as we have started these uptrends, especially back here, us holding support at or around this area has been extremely instrumental in allowing us to continue to see growth to the top side and see our uptrends really start. As you can see, when we did get that big breakout from summertime of last year, we went up and we failed to hold this level of support, which eventually resorted to us going back down to these range lows in which we created, which then added, another couple weeks before we were actually able to see some growth. And so what becomes very, very important at this point is whether or not we hold some support at this 20 simple moving average, or do we start to see that fall back below this level, which could resort to us seeing a fall as low as, $25 to even $2,100. Now, the way in which I'm playing this is I'm looking at it in the sense of a range. Do we fall below this point, or do we get above this point first? Now, the point in which I'm looking for us to get above is going to be our 50 moving average. Now, what we can see is that we have failed and been rejected at the 50 moving average in very, a lot, right? I mean, in some very important times. We got back above it, we failed to hold it, we resorted back down below it, and now it's our job to find some support and see that bounce back above it before we do start to see a continued fall to the downside. But historically speaking, when we're capable of breaking above it and holding above it, it has resorted into us seeing some pretty substantial growth to the upside. As you can see, we broke below it here, we resorted back above it, and we saw mass continuation to the top side. Similar to here, right? We saw this fall below it. As soon as we got back above it and we stayed above it, held above it, we saw mass continuation to the upside. Even back here, got back above it, strong push. Got back above it again, really strong push. And so what that tells us is that we are now in a range, a very important range, again, between our 20 simple moving average and our 50 simple moving average. And so the way in which I would be playing this at this point is just give it a range and set your stop losses and set your buy limits and go ahead and just say, if we get back above this 50 moving average and we start to show signs of holding, personally speaking, I'm going to start to mass accumulate. That is when I am going to start to do some strong buying, especially if the Bitcoin chart does support it. My personal game plan is to buy a little bit if we get back above the 50 moving average and really start to continue to buy if we do get back above this local high, which is currently sitting around $3,400. We get back above that level, that is my mass accumulation zone. Now, whenever I do that, don't forget, all of my buying at this point in crypto really happens over on iTrust Capital. My crypto IRA account, basically what this is going to be is a way for you to stop losing up to 40% on every single gain that you make in crypto. For example, if you do make, say, $1 in gains, you could be paying up to 40 cents on that $1 every single time that you make $1, simply just because you have to pay taxes. I don't like that. I am long on crypto. I'm a long-term holder. I support it for the long term. And so for that reason, I do use tax-free trading accounts. I do have a link in the description if you want to go check it out. Just at bare minimum, open an account for free and verify your email. Just do that so you can at least see what they offer, because it can be beneficial to anyone. I genuinely believe that. But in the event in which we are, going to see the price come back down from this point and we do lose this 20 simple moving average, I am expecting that a pretty substantial fall to the downside would be soon to follow, which could look like it coming all the way back down to its macro Fibonacci swing low to swing high, which could look like it putting in a low somewhere around $2,500 to $2,376, very similarly to what we saw back here, right? In which what happened was that we came up, we broke the trend line, we got rejected and got pushed all the way back down towards some of these range lows. At this point, what we don't want to see is that we broke the trend line, we got rejected off the moving average, and we don't want to see that resortment all the way back down towards those range lows. Obviously, we would all rather just see this thing start to make that forward progress. So this is a very, very substantial and urgent moment, right? This move can happen over the next couple of days, and I do want you all to be as extremely prepared for it as you possibly can. Now, as this move does get closer, I will continue to update you guys, so do make sure you do turn on the notifications on the channel and do stay tuned to see as we do cover this thing, as I think that it can be, kind of a big indicator of where the price is going, maybe even into March. So of course, do stay tuned for that. And if today's video was helpful for you, you can of course always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.